That's right, Melissa. So I think a few things. One is that the global manufacturing cycle looks to be turning, and we should get more confirmation of that on Friday when the flash PMIs come out. But also, just if you look historically, when the Fed eases and the economy doesn't fall into recession, that usually is a recipe for really positive rallies, strong price action, 20% rallies over a year. And it looks like that's exactly what the recipe that we have right now.
Evan, what happens if the China trade talks break down completely? What happens if Trump decides to put tariffs on European autos? I mean, all these things, do they have an impact on what your forecast is right now?
They have to, of course. I mean, if suddenly the U.S.-China trade talks break down and you get tariffs placed on all of Chinese goods in December, then that is going to be a very negative shock to markets and the economy. So we're climbing that wall of worry. We're assuming that the incentives are too strong for President Trump to increase tariffs a year before the election, but that's certainly a risk.
You know, David, is there something here that's very unsexy, and Bob did not name it, but I do wonder if it plays into the discussion, which is the shrinking size of the market. I mean, through buybacks and deals and private equity, the amount of available equity every year continues to get smaller, while the population of the United States, especially the investing population, continues to get larger. Is there a really long-term bull story here because the available assets just they shrink?
We think on the margin that definitely impacts stock prices, but what you saw 12 months ago is when sentiment turns negative, when people are worried about stocks, even though there's a shrinking base, stocks will go down, and they can go down very sharply. Of late, you just have positive sentiment. We do think this FOMO is definitely driving stocks higher these last 4, 5, 6%. Historically, it's never paid to jump onto a FOMO trade because you're just worried you're not going to make as much. Because usually all of a sudden some concerns pop up and the market can pull back. Having said all that, we do think there's some great buying opportunities in the market, some very good businesses that have missed the rally entirely. So you really can still put money to work, but you have to be discerning.
I looked at your list and I had to do a double take, David, because I saw SLB and I thought, oh my gosh, that's an oil and gas company, Schlumberger. There's no way that David Katz is recommending buying an oil and gas company, but apparently you are.
Well, if you look at that full list, each of these companies are really good long-term businesses, but have just been miserable this year. Schlumberger, the whole oil group, has done very, very poorly, yet oil prices are still at a pretty reasonable 57 to 58 level. They have a new CEO. We really think he's focused on earnings and cash flow, so we think that stock can be 20 to 40% higher. Top of the list was CBS. CBS has been absolutely a dog this year. Everybody is looking for content. CBS Viacom has that content, and it's at 6.5 times earnings. If CBS Viacom were about 50% higher in the next 12 months, we wouldn't be shocked. That's a very low-risk stock to buy here, even though the market's at all-time highs. This stock is down 20 or 30%.
And Cisco is another one of those stocks, David, that had a rough earnings report just last week. Evan, I want to end it up with you. Bob Pisani was mentioning something very interesting going on in the markets, and that is S&P value and S&P growth are both hitting record highs. What do you think is behind that sort of barbell approach in this market? Does that belie investors both fear of missing out, but also caution because we don't know what's going to happen with the trade war?
No, I think the broadening performance across sectors in the market is just a very positive signal. It's not just a low interest rates. We're heading into secular growth story. We really see a positive cyclical bottom here, and so some of the cheap value names and cyclical names can start to rally here as well. So the broader the market is performing, the healthier signal that is, in my view.